Greetings, Dr. Jeffrey Scott. This is my weekend market update for Friday, July 25th, 2025. I titled this one More New Highs as Markets Continue to Climb a Wall of Worry. Again, July 25th. This is part one. For those that follow me, I switch things up, trying to cut this one to closer to 40 minutes, and then I'll do a stocks only that I can go deeper on Sunday, although I'll talk about some stocks today as well as my thoughts on the markets. My email address is marketmripro@gmail.com, and you'll hear about my Google group as we go forward. It's called Top Down Trader. This is for educational purposes only. Anything we talk about should be taken in the spirit of education and not investment advice. The intent of the video is for me to demonstrate how I use my tools for top-down analysis, how I apply them. Trading involves risk. You're solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in the report. Trading stocks and options should be considered risky and should always consult with your financial advisor before making trades. And I do have tools in multiple platforms, finishing up the MetaStock tool this week. Hopefully it'll come out very soon. Excited about that because it's got such a big distribution and even beyond the United States. If you're looking for my wealth charts video, it'll be there Monday morning at stocksanddocs.com. I usually do that one Sunday night after futures are out, so I have a sense of what's going on. Although I think we all know what you see at 7 o'clock on futures on Sunday doesn't always mean what you see in the market on Monday. My Google group, as I mentioned, is called Top Down Trader. It's free. You get discounts on my tools. You get invited to private educational sessions where I don't put it out on YouTube or invite the rest of the world. There's some exchange among members. I post something almost every night, whether I do something on YouTube or not, and it's free. So just go to Google Groups, put in your Google ID, look for all groups, search for Top Down Trader, and let me know how frequently you want me to contact you. Speaking of contact, I don't do this often. This is a live meeting in Florida. I used to do them every year, but when I restarted working after my non-competes and non-solicits from hell were up, cut back on the live meeting. So I'm going to do this one October 27th and 28th in South Florida. You fly into PBI. The hotel, I'm down to the last two I'm deciding on, are 20 minutes, 15, 20 minutes north of the airport. Uber's fine. Cost is $12.50, includes either live, of which I'm limited to 12 spots, and after 3 days, we're down to 7 or 8 spots left. And then the rest will be on the internet. I will feed you and water you the entire day, breakfast, lunch on Sunday and Monday. I'm going to take a dinner cruise on Stocks and Docks, the yacht, Sunday evening. Cater dinner cruise, looking forward to that. Always have fun taking my friends out on the boat. And that's why I'm limiting to 12 spots, because when I get above 15 or 16, it gets kind of crowded. I will be the sole speaker unless John Person wants to come by and spend an hour or two with us. John has his seminar immediately before in the same basic location, the 25th and 26th. It's a great opportunity to hear from two different people of how they approach the markets and how they approach the managing, buying, selling, stops, everything with their stock and option purchases. It's a separate fee, but come for both. Again, if you have interest and you want to save a spot, you just contact me at marketmripro@gmail.com and I'll send you a link. And for those that contacted me already, you're all in, and I'm going to send you the links out on Sunday. If you don't receive a link to pay, then please reach out to me on Monday. But I think I've got it all down there. I always look at, the big picture. Is there a recession close? I think we all know the answer is probably not. Um, when we have the yield curve inverts and goes below the zero line, here's a 10 minus 3 month, the 10 minus 2 year. We get these gray bars every time we go below and cross back above. But we don't know when that gray bar is going to come. That gray bar represents a recession. So my guess is we get it in the second year of Trump's term. But we'll see. But I don't know when it's coming. I just know that I'll see signs such as the B of A U.S. high yield index options will spike as we go into a recession and during a recession. I will see that the the General Diffusion Index, Federal Reserve District 3 of Philadelphia will drop below minus 20. It's currently at 15.9. So yeah, we'll probably will get a recession. Who knows when it comes? Statistics don't lie, and every time we have an inversion and cross back over, it's followed eventually by a recession. But no one knows when, and I don't think it's imminent. Now, what's imminent is a week from hell when it comes to news and earnings, or from Nirvana if the Fed actually cuts, which I don't expect. Monday, nothing. Lots of earnings before the market and after the market. Exelixis is a biotech that looks kind of good to me. Um, on Tuesday, we got a bunch of trade, retail inventories, Case-Shiller home price index, consumer confidence for July, and job openings, but that's looking backwards at June. On Wednesday, we get the ADP employment, the GDP, pending home sales. Oh, yeah, this thing called a Fed meeting with a rate decision at 2 p.m. in the Fed Chair Powell press conference. My guess is we'll have more of the same, which is maybe talk a little bit more dovish, but still say he's holding out to see what happens with tariffs. On Thursday, jobless claims, employment costs, and the whole PCE complex. And then on Friday, we get the monthly employment report. So much fun. ISM manufacturing and more. So the news is a heavy potential to move the market. And then look at the earnings. Massive week of earnings. And some of the things that I'll probably talk about tonight are going to be up here. So that means you got to be very careful taking things at earnings date or just before earnings. It's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. The E index, which we put together almost 2 months ago, is holding gradual, gradually moving higher on the 17-day moving average. This is a index of the leading stocks. And I went back and looked at some of those stocks today, a lot of data center stocks, which are continuing to do well, that were presented at the meeting and put into the index. The purpose of this index is when markets are getting choppy or moving, you can put together an index of the biggest leaders at the time. And often, not always, but often that index will roll over in advance of the market rolling over. So it's an early warning signal. It clearly has not fired as of yet. On to the charts. Part two will be uploaded Sunday. I'll do a deeper dive into stocks that I'm watching, although I got a list of them today. And boy, are they heavy in the data center space. See you in Florida. It's not next year, it's October. All right, here is the daily brief, which just shows me how the market did today. If I look at 1 day change, diamonds up 0.43, spider 0.41, Russell 0.37, and the Q's up 0.24. In the afternoon, they were all neck and neck in the same area. And you could see for the most part, except for the Qs, which sold off a teeny bit at the end, they finished in the upper part, and even the Qs too, are above 50% of their daily range. The dollar was up 0.22, but finished on the bottom of the day. It opened up at 0.44, got as high as 0.55%. Volatility was relatively flat, and Bitcoin was down another almost 2%. Now, if we look at the week we just had, and it was a 5 day week, it was an interesting week. Spiders up 1.5 and diamonds up 1.3, Russell 0.93 and Q's 0.91. So all's good. I mean, everything did well, but boy, was there volatility in the beginning of the week, which we'll talk about. Bitcoin down 0.5% of the week, dollar still down 0.84, and volatility came out of the market this week. If we look over here on the new highs minus new lows, left is NYSE, the right is the NASDAQ. We're still positive, but the numbers have come down. We were triple digits on the NYSE a few days ago and almost to 100 on the NASDAQ. So there's clearly been some weakening. If we look at what was working in the S&P 500 sectors, the only things that were down today were energy and communication services. Leading were materials, industrials, discretionary. Industrials really had a good week, a really good week this week, and they're showing some strength. Over 5 days, out of curiosity, healthcare, which has been a laggard, up 3.5, materials 2.38, industrials 2.33, and the laggard for the week, interestingly, being technology. And that's interesting in itself. So back to the 1 day, if I look at some of the themes that were leading, marijuana, okay, gold miners, infrastructure development, clean tech, Internet of Things, China discretionary tech, software rather, aerospace, Norway semiconductors. These were some of the big leaders. Yeah, actually, I did the wrong column. Let me do that again. Cannabis, infrastructure, gold, transports, aerospace, home construction, internet, millennials, leisure, software, fintech were some of the big leaders. If we look over 5 days, forget cannabis, it's a cheap MSOS, but lithium up 5.88, home construction up 5.63, gold 5.5, genomics 4.75, silver 3.8, 3.5 for robotics, 3.3 for this robotics, metals and minings, infrastructure. So a lot of things up 3%. And if we just look the opposite way, over the last 5 days, what's lagging? Video games, MLPs, Internet of Things, oil, gas exploration, and interestingly, over 5 days, semiconductors were weak, and that probably explains why the Qs lagged a bit. Another thing that surprised me today is when I looked over at the right, we can see that across the board we had more positive sectors on Friday than Thursday, more industries, but 66 of the S&P 1500 was up, but only 45% of the NASDAQ was up and 57% of the NYSE was up. So a strong day, but the NASDAQ definitely lagging. We go to my timing model. This is the daily model, and we are at all-time highs on the week this week, just off the highs for all-time closing highs as well on the two on top, the spiders and the Qs. We've pulled back a little bit on the diamonds and on the Russell. And of interest, the Russell has a red bongo, but the buy sells remain positive. And when I look at the weekly, you could see just the powerful moves that we've had in these markets. It takes a second to load all the data. And you could see all-time highs on the spiders and the Qs. Not yet on the diamonds. All-time highs are back here and nowhere close on the Russell. So a little bit of a divergence between the spiders and the Qs versus the diamonds and the Russells. But everything is in a buy signal. So am I worried about this market? Yeah, I've been worried about it for a few weeks. We've had divergences with the RSI. We've had a lot of MACD divergences. But this market, despite issues with Trump and tariffs, despite other concerns, earnings related, world events, the market likes to climb a wall of worry, and that's what it's been doing. If we look at the US index ETFs, and let's just go into, start with the spider. Um, that was not a good candle on Thursday. The market said, who cares, and closed at an all-time high. I didn't really check on my market surge on volume, but I bet I could probably find it in here. So let's go, let me just see that. Not that there's anything bad there. Let's go back to market surge. Make sure that this is today's. And we can see volume was light on the NASDAQ and the NYSE. Not a big surprise considering it's a summer Friday and people are finishing up their vacations before back to school. What's bad about this chart? Not a darn thing, in my opinion. Seasonality still okay. We're about to go to an area in a bit where seasonality flattens and turns down when we get to September, but we're still okay. And the high low jump is at 86, so we're not extended. I think the market looks like it wants to go higher. All it takes is Trump tariff news to change that. The Qs, I could give the same story as I just did on the spiders. The Qs are at all-time highs, and you could see all-time closing high today, all-time high traded during the day as well. Again, 17th above the 50, above the 200. High low jump is at 77, so it's not at a place you expect it to pull back. So I'm going to show you reasons to be concerned. Don't worry, I'm not a Pollyanna today, but that looks pretty darn good. How about the diamonds? Diamonds don't look as good, but they don't look horrible. Maybe a little bit of a flag. Is this just a giant cup and a handle, and we're going to get a breakout soon? But the diamonds, the all-time highs are here. I don't know, diamonds may have actually, let's see, did we? No, got to go back to here. So let's put this back. I thought I'd left this here before. That's where the highs are, but we're close. And again, is this broken down? No, it's still trading, excuse me, above the 17, the 50s crossed up. And then lastly, the laggard is the Russell. But if you look at the Russell on its own, well off the highs. I mean, we have a long way to go before you get to the highs. But we're in a nice orderly move off this V bottom. We have a lot of little flags and we go higher. We have a bottoming tail today. I think the Russell looks fine too. Um, Not as strong as the others, but it certainly, to me, is not rolled over. So I put this together and I say the markets still look fine. Again, lots of external events out there, and markets don't go up forever. And one of those external events at some point will pop the bubble of the bulls. But I don't see any evidence that that's already happening or it's going to necessarily happen on Monday. But it's Friday night. We got a whole weekend for bad things to happen. VIX was down 3% today. And if you look at the week, VIX is at a place where I'm not going to say I'm nervous, but you're getting to a level where reversals usually appear. So we'll be watching the VIX as a clue. And as my buddy George Lee used to say, when the VIX is low, look out below, and when the VIX is high, it's time to buy. And we're nowhere close to high, obviously. And then lastly, the dollar, which broke out of some long-term downtrends. Um, and now I think the dollar's issue is going to be this line here. You've got a line here that stopped it twice. Right now, it's going to get through the 50. It did pop up early in the session, but at the end of the day, the dollar was only up only 0.22 after a bigger gap up and gave up some of that. Dollar, as long as it's weak, that's supporting the market. Um, Although plenty of people are for strong dollars. Commodities, gold continue to drop down to the 50, down almost 1%. Silver, which had been leading gold, pulled into the 17, bad candle, minus 2.34. Oil was down as well, 166, and natural gas remains dead to me. And then both the 10-year down a half a percent and the 30-year down 0.42%, both came back down. And are retesting the 200 on the 10-year and the 50 on the 30. I just want to see it stay below the 5% range because I think a break above that or rapid move up is what's bad for the market. If I look at the buckets, I'm not going to spend any time except to say they're neutral. Good. Market breadth, NYSE on the left, looks like we set an all-time closing high, 2950. 45 versus 29.21. So all-time closing high in the NYSE. And I think say the same thing on the NASD Composite. So it's the spiders, the Qs, the composites, both the NYSE and the NASDAQ. Um, this These boxes are stocks above the 20 in green, stocks above the 50, stocks above the 200. Even with higher highs, they've actually pulled back a little bit of a divergence. New high, new lows have come down this week as we've gotten to higher highs. That's a bit of a divergence. AD lines, even with the higher closing high on the NASDAQ Composite, the AD line was negative. And then the up-down volumes were positive on both. And the only signal that we got on both of the NYSE Composite and the NASDAQ Composite today is the Bango, which is an exuberant buying signal. Not a surprise, but you can get them for quite some time before the market rolls over. And then if I look up here at the 13-week new high, new low, when it gets to 95, I get nervous. It's 92 on the Spider, 75 on the NASDAQ Composite. It is 77 on the Russell 2000, and it is 88 on the S&P 1500. So it's extended, especially on the spiders and the S&P 1500, but it's not at a I must correct level. And you could see in the spiders, you're still actually heading up on the stocks above the moving averages. You could see the AD lines pointing up on the spiders, but despite higher highs, they've actually turned down on the NASDAQ composite. The AD line is lagging, I think, on the Russell, and on the S&P 1500, looks like it's doing okay. And you can also call out some RSI divergence on the Russell 2000 as well. So if you wanted to find reasons to be bearish, they're abundant, but that's typical of a bull market. Are we in the later stages? Sure. And those things are going to pile up, and the market's going to continue to climb that wall until it doesn't. And I'll be looking for signs. And as I said a week ago, I expect to see certain things on this market breadth chart. It's the first chart I look at every day. I'm going to expect to see some things that I saw here at the market top, and those were the Hindenburg omens. Those are signals that the market is getting into a risk area. We don't see those. It's something I will be looking for. Do they mean a lot? Well, if you only get one, no. You have to have two within like 33 days, trading days, for it to be confirmed. And 1 out of 4 calls a big pullback. 3 out of 4, the market typically goes sideways with a little bit downward tilt, but there hasn't been a major market collapse since the Depression that wasn't preceded by a Hindenburg omen. So I pay attention to them. And then I like to look at ratio charts. And what I saw here that really blew my mind was these are the S&P sectors versus the spider ratio charts. Industrials really strong. Technology we know is strong. And they are by far the big leaders. Communication, probably not helped by Netflix this week, has come down some. Discretionaries try to come up, but it's really been a story of the industrials, technology, and the utilities. I think if we just looked at electrical generators, you'd probably see utilities doing okay and materials turned up as well. The JAS layout is how I approach the top and bottoms, top down and bottoms up of the markets. And typically I'll go into the top down, I'll rank by change the sectors, and you're going to notice they're going to look different in order than they do in the S&P 500. There is a reason for that, and the reason is I have packed in those sectors over 3,700 stocks. So I'm looking at a much broader swath of the market. Now, when Mag 7s are the only thing that are working, maybe I don't really want a broad swath of the market. But if I'm in a market scenario where we're broadening out, and I think we have been broadening out, I think that's pretty clear, then perhaps having that broader perspective on the market is not such a bad idea. So um, that is what I'm going to look at from a top-down perspective. On the left are the sectors, and on the right are the industry groups. And what I typically do is every night I will identify the top 3 sectors, and you can see that gives me 762 stocks, but let's just take the top 10 industries in those. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. And then let's now look over here at what we have, and we can rank them by many different things. One thing I look at is a short-term momentum. So fix is one that I looked at yesterday. It was on my two dots in a row scan because today I got the third momentum dot. And boy, did this thing explode on earnings. And if you want to see what great earnings are, a 39% surprise on earnings, a 9% chance surprise on revenue. Look at the quarter over quarter or year over year at this quarter growth rates. It trades at a multiple of 34. It's probably underpriced. I mean, this thing blew up and you'll get 409 going to 495. So it's still 23% growth projected for October. I did not ride this. It was an expensive stock. It already ran a lot, but boy, maybe a little bit too extended right now, but amazing earnings. EME, MCore Group, it's an industrial, another very expensive. Uh, bu- 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 I like to know what these companies do. And if you go and hit that, you can get news. I know this, they used to do some kind of wire stuff, but, and data center expansion, fuel long-term growth. There you go. I mean, that could even be the theme of tonight, which is data center expansion. URI, United Rentals, they're not in the building the data centers, but you got to get the tools to build for the utilities. And you see construction on the road and other infrastructure. More often than not, you're going to see attached to that is a emblem called United Rentals because that's who is supplying the equipment. And as we increase manufacturing and construction, URI is going to do well. SAIA, I think they had good earnings today. Earnings are out. You could see um, the change was bad, but a lot of times the changes are already baked into price. But they had a 11% beat. So maybe there's a reason why this one had a great move. So earnings are out. I don't know what they do. Um, so I could come in here. Maybe I want to read this Seeking Alpha article. I just clicked on it and I could then, I'm not going to sign in right now, but this takes you right to the article if you wanted to read it. Again, I don't know what non-asset truckload expedited and logistics services. Not that exciting, but boy, what a great move. Um, Big pullback and a big gap up and move with strong relative strength in OBV. One of the stocks that I do own is GE Vernova. We've talked about this multiple times. And this one, again, the power of great earnings. Come on, GEV. And you could see a massive move here after a pullback and a break above the 50. This is when you wanted to buy it, but it gave you another opportunity over here as well when it went sideways into the moving averages and popped. And here was a pullback to that 17 and a pop. And earnings came out and you had 162% growth rate. So it came down to 323, but I'll take it. And look what you're compared against next time. 35 cents to $1.82. Imagine what that growth rate's going to be. Um, sometimes I get a little bit worried and when I see numbers that seem just too incredible. So I actually looked it up here. If I type in GEV, and this is a market surge, I use it as a backup platform. And you could see the growth rate here for 26, 64% and $12 of earnings. 60 times 12 gets me in the $700 to $800 range. And oh, by the way, 64 is less than half of the current PE. I think this thing has got earnings power to go much higher. We'll come back to it. PWR is another company in the power generation space. It supports that and one that is also involved in the data centers. Its earnings are coming, big surprises going back through 2023. Um, a stock that's had a big run and unfortunately is kind of extended. STRL, oh, these are just great companies. This is, well, they're great stories today. Sterling Infrastructure, they're building a lot of the data centers and the supportive energy. I just don't know how you buy that. In fact, you may have noticed that was a stock that was sitting up in market search because I wanted to look at its earnings growth. 11% times 9, it's already at 260, 37 times 9. It's growing, but I don't like seeing the growth slowing down. So not sure. But boy, this thing's done great to date. Just I'm not sure I want to chase it here. AGX is one of my favorites. It was yesterday also one that we looked at because on Wednesday and Thursday it met my two momentum dots signal and earnings are already out. Amazing earnings per share growth. This one's running again. And guess what business this is involved in? Yep, it's got something to do with data centers. Construction stock Argan builds new base, nears entry as profits surge. Future will need more electrical power as AI boosts data center demand. Are you noticing a theme? BE, big breakout. Well, I can't chase that. Well, you know what? Then I looked at its earnings going forward, and I'm looking at annual, not quarter over quarter. What does these guys do? They are generate and distribute renewable energy and supplies, electricity to residential, commercial, and they did a data center deal this week. 87 growth rate going into 26, the same as their PE. 86 cents, that's 64. That's a $70 to $80 valuation if it just maintained that. Um, I think this one nice to buy it on a pullback, but my God, VRT, it looks like all the others. They make some of the cooling that helps support and keep the data centers cool. And you could look for earnings on this week. So I might be careful chasing this one, although I like it a lot because remember that thing about knowing when earnings are? And earnings, I saw them there somewhere. They're here this week. I know I saw them. Actually, I'm showing you the wrong earnings set. Hold on, that was not the one I wanted to show you. It's not what I showed you before. Or is it? No, because I had the different. Hold on one sec. I am sorry. Here's what I want to show you. All right, let me resume slideshow. You know I saw it, and I'm not going to stop until I find it. VIRT. Not that one. That's close. Virtue Financials. Yeah, because it was going to be one that I was thinking about. Here it is, Vertiv. So you got to know when your earnings dates are. And all right, so that one looks good. So there are great stocks here. FTAI, is this one cleaned up its act? This one had sold off before. Let's look at FTAI. Oh yeah, look at seasonality on Vertiv. Now FTA has not come back. This is how I do it. I build this list and I just hit a bunch of great stocks by just looking at what makes up the leading industry groups in the top sectors. There was not one mag stock there. There wasn't NVIDIA, but these are the type of stocks that are working, and there's more, and we'll look at them in a few minutes. Another thing that I'll sometimes do is I'll just look at the industry groups when I'm not highlighting any sectors. I got a lot more industry groups, and I might just look at the top 10 here. I thought this one was sort of shocking. Healthcare plans are so oversold, but they're bouncing. Look at this hammer here. That is Humana. Here's Elevance. Now, are these just going to be bear flags and they're going lower? I mean, that's my working diagnosis. But these healthcare, CVS owns Aetna, if you didn't realize that. Are these things bottoming? I don't know. But notice all the green that occurred in health plans today. It may have just been a reversal of a really bad day yesterday. So I'm getting up to 35 minutes. Let's go back to the other thing I like to do. And let's just look at real quickly at the FANG stocks. And somebody pointed out that I was missing Apple. So let's see. And I actually do like APP, and that's why it's sitting there. So and Apple's been below the 200, and I think, all right. So I'm not really, I'm looking at Apple, great company, great story. I like buying things that are in uptrends and above the 200. Often stocks will trade up to the 200. This is a classic looking bear flag and break down. I'd rather buy it above the 200. But Amazon has had a great week, great couple of weeks after breaking above that 200. APP is one that I like a lot. When are earnings coming out? Earnings are not out to August 6th. You're going to have 89 cents versus $1.97. So that's over 100% beat. Six. Well, just about 100% beat. You're going to have 10% growth in in revenue, but that's a pretty impressive growth rate on the earnings. PE's 46. This is one I like. You got another week or two. Google also broke out, didn't do, like many things this week, had a pullback day. Theirs was on Thursday, bounced a little bit today. Meta, um, talked about the flag. Last time I looked at it, broke above it. I have no issue being in Meta here. Microsoft, unbelievable. The question is, when is too much? And is it getting extended? It's only 83% in the high jump. It's a pretty orderly move. They don't go forever, but I'm not saying it's done. Netflix shows what happens when you pause. And I thought the earnings were great. I think the problem was they talked about the need for increasing costs to produce content, and that would hurt their margins. And Tesla really didn't have a great number, and you can see the gap down. So I can look at groups of stocks, or I could go into the impulse list, which is the 3,700. And one of my favorite things to do is very quickly just to look for pullbacks in uptrend, put $5 and 500,000 shares, hit OK, rank them by my impulses that are up. And let's just go through Scholastic. We looked at this earlier in the week when it had these two dots and retested 200 and broke out. I think that one looks interesting. Earnings are out. Okay. RGP. I'm just going through real quick. Cheap stock. Something happened with it today. Columbia Banking. VeriSign is gorgeous, if you can say gorgeous about a stock chart. Here is a stock that had been up here, 230. Let's go into weekly, make my life easier. And traded off hard, and now it's in this massive, massive move. Massive move. And if I go back to the daily chart, I don't know if this is going into a climax run here, but probably a not sustainable uptrend, sideways move, and a breakout. And the breakout came on earnings, which did not surprise to the upside. Pays a $3 dividend on 311, so a little bit less than 1% on a dividend play. What a beautiful chart. I mean, When should we have bought it? Can't buy everything, can you? Then here was another opportunity. All right, Udemy, I'm just looking for things that jump out. So I could do that all night. And one that does jump out is at Newmont, NEM. Was this on earnings? On earnings, 58% surprise to the upside. That may make me go read their report and see how is this something that I can extrapolate to others in the gold mining side. Here's that fix we talked about. Here's Decker's also had a big move on earnings today. COUR is an education company, big move on earnings today. There's your VERT, and don't have, yeah, 7:30 earnings. Here's that Sterling infrastructure we talked about. So a lot of those stocks I could have picked up by just doing that. And since I'm going to come back and look at more stocks on Sunday, let me just look at one more scan, and then I'm going to show you my favorites. And then on Sunday, I'll go and look at one of them I want to play and show you how I'm going to manage it with an options play. So if I put a 500,000 shares and a $5 price, the one that comes up on the two dots is fix. And boy, it's hard to buy this. But if I had to be a guessing person, this thing maybe pulls back a little bit and then goes again, but it's going to be on my radar to watch. If I take out the 500,000 shares, it adds a couple things. So you can expand that list to be bigger by just clearing it and look at just 2-day momentum up, which has really been my go-to scan. LPL was on the scan yesterday. It was on one of my scans yesterday. Had a beautiful breakout today. Investment management is another one that I like. So I actually put together a list of stocks, and they've all come up. Imagine that, pretty much all. So I'm just going to look at some of my favorites here. AGX, we looked at it. I think it's buyable right here. We talked about how it's involved in data centers. That is the theme, folks. VRT. This one I'm a little bit nervous because it's got earnings coming out this week. I wouldn't get in front of the freight train. At least I don't. GEV. Somebody's got to power the data centers. They're going to build it. Again, it looks like it's too far to buy, but the earnings strength on this thing are incredible. OKLO, when I gave you a couple, maybe 10 days ago, that boy, did it hurt on Monday and Tuesday. And Wednesday, Thursday, Friday, this is had a great move, breaking out to all-time highs, I believe. But you had to, and I did hold it, and partly why I held it was because I was at a meeting Tuesday when it opened lower again. All right, let's get this back. I'm looking at a weekly chart here, and it opened lower, but by the time I came out of my meeting, it had recovered. But look at this bottoming tail. This thing wanted to be bought. They could have broke it down like they did here and here. OKLO still looks great to me, and I do have a position in this. I have a position in GE Vernova as well, and I probably will buy AGX. BE we looked about, also construction, supporting data centers, and I showed you the earnings growth coming in. And even if you look in here, you could see that the last 2 quarters have been mega strong on earnings change with surprises. And revenue is not as steady. But this pop that we saw in here is pretty much related to the news here with Oracle. Again, after a run like this, it'd be nice to buy it on a pullback. PALN, PLN rather, is another energy play involved in, and we had looked at this thing way back here, but this thing also had a big move, getting expensive. But I think this is the one that I almost fell over when I looked at their forward-looking earnings. $18 projected in 26. You multiply 18 by the current PE, which is 36. And I think you get like 540 plus. But look at the earnings per share growth projected here. You just wonder what the stock can do. And then what else? CRDO also is in the cooling of data centers. There is a theme here. What works the best right now seems to be anybody that's involved in supporting any aspect of data centers. This one pulled back and looks to me poised to go further. CRDO. And then we looked at STRL. Be nice to buy it on a pullback, getting extended. And then I'll switch my stories. This is a stock that I did very well on earlier this year. And probably should take out all those lines that are no longer meaningful to me. But let's do that. Because I do think there is something here that's meaningful that I'm going to show you, just highlighting them and clicking on them. This one came out of a base with then a great move here, sold off. And what interested me in this was pull back to the 50. And I think it's worth watching. I think this one's getting ready to move again. And then the other one, and I'm an Uber Eats guy, but boy, I should be owning DoorDash stock. What a great lower left, upper right leader. Wow. When are its earnings? August. 42 cents versus a loss. 316 versus 263. Looks pretty good to me. So I didn't mean to give you that many stocks and go 47 minutes. So I'll probably concentrate Sunday on anything else that comes up on my review over the weekend, and then maybe how I'll look at how I might play AGX. Have a great weekend. Feedback on separating the two videos, being a little bit shorter and getting it done on Friday, or should I just go back to one and post it whenever I get to it? Thanks, everybody.